Now we're going to take a look at the accounting equation. But before we can do that, to help you understand the accounting equation, I want to do a brief overview of the two main financial statements, which are your profit and loss and your balance sheet. Your profit and loss is also your income statement. It simply records your income, your cost of the product, and the expenses for a specific time frame. This can be a month, a quarter, a year, but it is for a certain period from, say, June 1st to June 30th. So income minus cost of goods sold minus expenses equals your net income, which is known as your profit. That's your profit and loss. Now the balance sheet reflects the net worth of the company. You have your asset accounts, and we're going to go into this into detail in Chapter 6. This is just a brief overview. You have your asset accounts, which is what you own, equals your liability accounts, which is what you owe to others, plus the equity accounts, which is the worth of the company. Retained earnings is one of those equity accounts, and that is the accumulated net income for all the time the company's been in business. So each and every month, when you have an income statement, a profit and loss, this net income is going to be transferred over to the retained earnings account on the balance sheet. Then these income and expense accounts go to zero, and the first of the following month you start all over again. These two reports need to make sense in order for you to understand the accounting equation. So let's take a look at the accounting equation now. This is the accounting equation, but I've kind of worked it backwards. Normally this would be up here at the top. So what is the accounting equation? The accounting equation is assets equals liabilities plus owner's equity. You've probably all learned this in school. It's kind of an awkward way to look at it. I like to say owner's equity equals assets minus liabilities. But what we want to see here is the relationship between the profit and loss and the balance sheet report and how they come into play. If you look at this, assets, liabilities, owner's equities, these are all the accounts on your balance sheet. This is your profit and loss up here, and this is your balance sheet down here. So you have your revenues for the period, which is your income, minus your costs and expenses. That is your net income for the period. So that net income for the period goes to the balance sheet as retained earnings, but it also joins in the net income from all the previous periods, which is the beginning balance of the retained earnings. So the beginning balance of the retained earnings and the new net income are your new retained earnings, plus all the money that the owners or shareholders put into the company. So contributed capital plus your retained earnings equals your owner's equity. So assets equals liabilities plus owner's equity. This is the profit and loss feeding into the balance sheet. That is a quick and easy explanation of how the accounting equation works on a monthly basis through your financial statements.